All right, so basically we'll be looking at how to invest in stock market. Now, I've been doing it for about 4 years, and there are losses for like the first 2 years, but by God's grace, from 2003 till now, I can proudly say that I'm getting undo of it. It's a learning process. I mean, we continue to learn. But so I figured I should start sharing my knowledge with other people too that can profit from it. Bradley, do you have any knowledge of the stock market? Okay. All right. So have you been investing or trading? Have you done anything in the market? Okay. All right. And by God's grace, we'll be able to we'll see some improvement. Okay, so since we're talking about the market and the market is open, the active one 5 days a week, that's Monday to Friday, 9:30 to 4 p.m. But there is pre-market and there is post-market. That is, it opens for Robinhood. Uh, they call it 24/5. That is 24 hours for 5 days. So basically, as in we'll talk about what's going on since the market is active. I mean, it's not like a past thing. So today, bro, okay, and as okay, fair, as in, okay, no need to bother you talking today, right, sir? Oh, okay. Mo fẹ́ sọ pé as in what are the things tẹ́yìn notice in the market today? Uh, yeah. Okay. Yes. Okay. Yes. All right. Yeah, that's good. As in, so the expectation was, I mean, we're not sure of who will win the election. But from yesterday night, people, as in the investor, they start leaning towards Trump especially when they call Georgia and North Carolina. Okay, so the stock market start going, but today only the S&P went up by about more than 2% only. So what people think, so the psychology, I mean the thinking of the people move the market, but one need to understand the fundamental of each company, Tayon Farah, because most time, people just, as in they call it hard psychology. That is, if however the multitude are moving, is the same way people will be moving. But if one's gonna succeed in the market, we need to move beyond that. That is, this is what people are doing. We need to come to understanding why are they doing it. And should I join them? That is it gonna be profitable? Is it like a trend that's gonna continue? If not, then there is no need of joining the people. So how is your Tesla doing? Yes. Okay. Okay. All right. So that is good. But another thing that I want to point out is that is except for the S&P, which is like the best 500 companies in the US. There are more than 500, but they just call it 500. Sometimes they could be less, sometimes, but but that's just what they call it. So except for that, like we call it the whole market, an individual stock, one may not, the time we use they don't marry your stocks, only date them. The meaning of that is that if the fundamental, your reasoning for buying them, if it's no more working for you, you should be quick to get out. That is, one shouldn't just say they will be going up forever, going up forever. One should keep following them. So Warren Buffett will say you can put your egg in one basket, but you have to watch it very closely. Are you getting my point? Okay. Okay. Okay, so Bradley no she one version. Oh, okay. As in, okay, so meaning is at some time you can put your eggs in one basket, but you have to monitor that basket closely if you do that. So they will say that diversification is a protection against ignorance. So most of the advisors, they will just tell you diversify, diversify. But sometimes it doesn't pay you to diversify. So it's just like some people say if you just gather 100 company, one of them will succeed. So what if one out of the 100, none of those succeed? Because it depends on the 100 company that you gather together. So in essence, it's a good idea, it's a better idea that one research the company that you're actually gonna buy. So like 9 out of 10, you will succeed and just let me just gather as many companies as they said diversification will protect me. So that's just protection against ignorance. That is a protection against what you do not know. But if one's gonna succeed in the market, then you have to come to a place of being able to have a story in the sense that this is the reason I'm buying this company. This is what I think will happen in the future. There's no certainty in the stock market. We are dealing with uncertainty, but we have probability. So you are saying at least your probability 9 out of 10, you should be able to say probably 8 out of 10. I'm thinking in the future, this is what will happen to this company. That's based on your research, not just no, not just based on a guess. So if you do your research very well, then 8 out of 10 of those companies will succeed. So for example, I have five, but based on what happened in the news yesterday, okay, one of them went up by 20% in one day. That's one of those stocks that I'm holding. As in today only, I went up by 20%. but there are two other that went down by 3%. So the way I'm looking at is that out of the, you have a question? Yeah, okay. So I'm saying out of those five, from time to time, some of them will move or some of them will move down. But my thinking about them is that in the next 1 year, I want to achieve average of 20 to 30%. That's my own goal. As in to be able to realize 20 to 30% return. So like the one that went up 20 today now doesn't mean I have to sell because the fundamental, my reasoning behind that company has not changed. So it's not time to sell it yet. As in, like this morning when I look at it, it was up by 17% already. I'm thinking probably I should, probably I should sell some and buy the one that is going down. Then I told myself, why don't you check the reason why the other one are going down? But by this evening, when I check, the one that have been going down went down more, like 2% in the morning, and now it's 3%. But the one that I was 17 is now 20. So in a way, once you check why are they going up, why are they going down before rushing to sell and buy. Do you? I mean, do we have any question? Yes. Yes. And the same stock that I'm holding now is now 44% up today. That means I went up 24 tell it. So today now is I have a return of 44%. Yes. That's what I'm saying. As in, like I said last week, I said I believe it's gonna get to 32. Then from 32, it's gonna get to 38. So today now, yes, it has got to 30. So like last week when we were talking, it went from 29, it went down back to 26. But after that last week of talking, it went up the way down to 23. But I said when it moved 23 or low, then it's time to get out. As in, that's my own projection. I mentioned last week that once you get to 23, then I need to start thinking. Probably my own thought about this stock is no more, as in the fundamental is no more holding. But from that 23, it picked up again, went back to 25. But today now it's not 29 and it's not 30. So I've gone up by 44%, but the percentage doesn't matter to me if the fundamental of that company has not changed. So I believe at one point, I don't know when. So last week, they went all the way to 29, then people start selling. They sell it all the way down to 23, but today now it's back to 30. So I believe next it will get to 32, then from 32, 38. All right, so after 38, then I may have to think what I would do next. Okay. Okay, the fundamental is okay. Good question, ma. So last time that we talked, the same company that I told you that I believe they will get to 32, then 38. Okay. So I said once it get to 23, then I'll start thinking if I should sell. So when they reported their quarterly earning, they missed by 1 cent. But the reason for missing is that they were giving like a giveaway. As in, if you invest in them, they give you 1% back. So that's the reasoning. So that's not a bad thing for that company. So even people start selling from 29 all the way to 23, I know that wasn't a bad reasoning. Then I didn't sell. So today now they are back to $30. So, but the fundamental of that company is that they are what they call disruptor. Anyway, I'm talking about Robinhood. Meaning people know before, if you want to invest in stock, you have to pay to buy. They were the first one that started free for people, and other stockbroker now follow suit. So that's what I'm by disruptor. As in they disrupt the way things have been done. That's one. Now, when I look at all other disruptor like Tesla, they had a story. A story meaning when at one point 2010 Tesla was not profitable. But at like 2017, they went from like $30 to 1,200. Okay, but Tesla today now is 388. That's because they split. Split meaning that one share they split to four. So today they are, if we multiply by four, is now 1,200. So I believe that the same thing that happened to those disruptors could happen to these people because they are offering value to the community, to people, to the public. The same thing happened to Amazon. They were not profitable when they started too, but at one point they took off because they are offering value to people. So that's why I believe that even if I've gone up by 44%, it's not time for me to sell. As I believe in this company. But every 3 months, they report their hand, how they are doing. So I listen to that. So if something change, then I will know it's time to get out of this company. But if not, if what I think about them is still holding, it doesn't matter if it has gone up by 100%, I will still be holding them based on my thought about them. Okay. So any other thought or any other question? Okay. All right. Okay. Okay, that's good. Okay. Okay. Ah. And that's a good point. But I will be sharing a website. Let me just, it's financialvisual.com. So that website can tell me who are the people holding it. Then it gives me an idea. But what you mentioned, man, is true. As in, there are actors, there are players. So, but you do your best to understand who are the people holding them. Okay. So that website can tell me the company that are holding it or the people behind it, who are the people selling, who are the people holding it. So, but it's not every time that you will get it right. But mostly the one that people that they play with is what we call penny stock. Penny stock that are less than $5. So people will gather themselves together and say, let's buy this stock. Once they run it up, they call it pulling the rug. Then they start selling. But usually they do that for stocks that are less than $5. That's why they call them penny stock. Tesla or what? Robin Hood? Okay. All right. Okay, so basically, as we only have 5 more minutes left for today, as in like 7:30. As in, so what we're talking about today is like the reasoning for holding a stock. Yeah, you could set it that once your stock go up by 30%, that you will reduce it by half. That that's if that's your thought. As in most of the time, one can do that. That if any stock has gone up by 30%, you take half off the table and leave half there watching it. But it depends on what you think about that company. But that's an advice that some people will give you that if any stock that have gone up more than 30, you should take half. They say you can't go broke by taking a profit. That is true, as in that's a acceptable thought, as in you cannot go broke by taking a profit. But if you understand that company and you think they have a future, there is no point in rushing to sell. But that's an example that I have. The other company that are not doing fine today, that I need to check what's the reasoning behind it. So these are real estate stocks. So the reason behind them is bond market is safer, but they're still paying about 4 to 5%. So why would people put their money in real estate that is paying about 5, 6% if they could buy a safer government bond? So that's like one of the reasons. Or the whole sector. The whole sector is not doing fine this time around. So there's what we call sector rotation. Anybody want to chip in on that? Sector rotation, as in, do we have any understanding of what that means? Okay. Okay. Yes. If there is a yes and no answer. So all of this is like a personal thing that anyway we can talk about it. What I'm by talking about it probably not necessary today, but after this Zoom session. That is, but it depends on how one is reasoning. Like now, before we started this class, there are some news that I'm reading. They will say one expert will tell you, oh, the stock market is so expensive now, so it's time to get out. And they will tell you what is coming is going to be worse than 1923 or 1929. Okay. But my question is, as those people sold all of their stocks? Most of the time, the answer is no. So if they said the bad thing is coming, yeah, bad thing will come one day. So when you two cannot pinpoint that this is when it's gonna happen, then you are not really a guru prophet, you are just making noise. So in that case, I will do what we call cost averaging. That is buying little at a time. So even if the worst happen, you will buy it cheaper at that time. And if it's too high now, you will buy it. But then the third thing is having a long time view. So long time view is 5 years, 10 years, 20 years. So from what we have seen, like real estate, if you buy a house the last 20 years, today you will be celebrating that you did buy. But 2011, no, things were so cheap. But 2005, they were expensive. They were expensive. But today, people that bought 2005, those that bought 2011, they will all be celebrating. So I'm saying the best way to handle is if one is not sure what will happen in the future, one can be buying little by little, not at once. So even if the worst happen, in the end you will come out, as in you will come out good. All right, we've spent a good time today. So, any last question? But if we do ask question, we can talk one on one apart from this Zoom. But I want to keep the Zoom to 30 minutes so that, as in private people that are like time conscious, we know. Okay. Okay. All right, that's good. Eh, say that again. What we will do is that we can connect on WhatsApp after the Zoom. No. No. I understand how it works, but I want to stay with like circle of confidence or circle of expertise, as in what I worked for me. Okay. All right, so we can chat on WhatsApp or on phone later. As in, if you text me a good time, we can talk. Okay. All right, I want to thank you for your time.